Writing a business plan is possibly the hardest part of the business process. In creating a business plan, you are creating something out of scratch, a business idea. Developing an understanding of a business, its market trends, growth opportunities, and financials are time-consuming and no doubt is a frustrating process. In many ways, the research is the easiest part to develop. Once you have the clear idea of all these elements, the method of writing a business plan should follow easily, which helps you to answer the question on how to write a business plan. Today, we are going to clear all the steps for how to write a business plan for starting your own business in 2020. Step 1. Write an executive summary. This is a brief outline of what the entire business plan includes, key points from all sectors of the business plan. Essentially, this document should be able to be separated from the rest of the plan and read individually and still make sense. This part of the plan is often given to potential financial backers, board members, and other interested parties for review. 10 things to cover in your executive summary. 1. Who you are and how to contact you. 2. Your product or service and the problem your business solves. 3. A description of your target market. 4. Your purpose, the reasons you're writing a business plan. 5. Your company's size, scale, margins, or sales forecasts. And 6. Critical details like key players, use of funds, and exit strategy. As a beginner, you must need to rewrite your executive summary at the end of the business plan. Step 2. Company description. The company description of your business plan should include 1. The official or legal name of your company. 2. Your business location. 3. Your company structure. Are you operating as a sole proprietor, partnership, corporation, LLC? You will state that in your company description. 4. Ownership or management. 5. Company background or history. 6. Your mission statement that clearly defines the purpose of your business and what it represents. 7. Product and market information. And 8. Your goals and objectives. You want to briefly touch on your goals, both long-term and short-term. Step 3. Products and services. Businesses can take many forms and may deliver either products, services, or a combination of the two. For instance, a company that sells floor tiles may also offer to lay the tiles as a service. This section should clearly describe the products and services offered by the business. Step 4. Marketing and sales plan. Sales planning is critical to sales success. Return on time invested, or ROTI, should be key criteria that every salesperson should use when evaluating their account base. To write marketing and sales plan, you have to focus on 4 things. 1. Key questions about your customers. Write all about who your customers are. What do your customers do? Why will customers buy from you? When will you be able to contact your customers? Where will you find your customers? And how will you reach them? 2. Key questions about the market. How big is the market? Is the market local, regional, or national? Who are your competitors? 3. Key questions about your sales performance. How many sales have you closed in the past year or years? What is your record for accomplishing typical sales activities, like the number of contacts, interviews, and presentations? How effective are you? Are you proficient at the key steps in the sales process? Are there skills that you need to improve? If so, what is the best way for you to improve your skills? 4. Key questions about your target objectives. Objectives for the period. How will you measure success? Can you categorize your customers into useful categories like A, B, and C, where A customers are your very best ones, and C customers are more like potential customers or prospects? Step 5. SWOT analysis. A SWOT, strengths, weaknesses, opportunities, and threats, is a tool used to provide a general or detailed snapshot of a company's health. Think of your SWOT as a tune-up that every business needs periodically to diagnose and fix what's a bit worn, what's on the verge of breaking down, or what's already broken and needs replacement, so that you can keep the business humming even better than it has in the past. You need to add 4 things into your SWOT analysis. 1. Strengths. What is your most reliable source of financial growth? Where is your customer growth coming from? What do you do very well as an organization? Where do you excel insofar as your employees are concerned? 2. Weaknesses. What is your biggest financial weakness? Where do your customers think you need to improve? What do you do poorly? What are your biggest challenges with employees? 3. Opportunities. What is your biggest opportunity to improve your finances? Where could you dramatically improve with your customers? What processes will drive you well into the future if you could improve upon them? What opportunities do you have to leverage staff? 4. Threats. What threats could seriously impact your financial health? What is your biggest concern about your customers? What current areas of your business might harm you later? What threatens the people within your organization? Do not forget to create your USP. The reason why many startup entrepreneurs fail to gain any traction in a competitive marketplace is because they don't have anything that differentiates them from their competition. Too often, they're simply copying what's already out there, instead of uniquely positioning themselves to give themselves an upper hand on their competition. You can create this unique positioning by creating what's known as a unique selling proposition. It's the answer to the question, what do you do differently than your competition? A lot of entrepreneurs will simply say things like, we're better, we're faster, we're high quality, etc. But anyone can claim that they're better, faster, and higher quality. It's not enough to call yourself these things. Instead, it's much more effective to offer something that your competition won't be able to copy that easily. And if they do, it may affect their bottom line, since they can't offer it the way that you do. Step 6. Operational Plan. The operations section of your business plan is where you explain, in detail, your company's objectives, goals, procedures, and timeline. An operations plan is helpful for investors, but it's also helpful for you and employees because it pushes you to think about tactics and deadlines. You need to add 18 things into your operation plan. 1. Cash flow forecasting. 2. Profit plan preparation. 3. Flexible budget. 4. Break-even analysis. 5. Variance report. 6. Weekly position report. 7. Executive review. 8. Management meetings. 9. Mission statement. 10. Strategic team operating plan. 11. Organization structure. 12. Delegation of authority. 13. Position guide development. 14. Hiring procedure. 15. Performance evaluations. 16. Progressive discipline. 17. Employee compensation. And 18. Profit-based incentive system. Step 7. Financial plan. If you own or operate a business, it is essential that you have a financial plan. Without proper organization or management of your finances, your business could crumble. To avoid this, it is important from the point you are starting up that you plan the various aspects of your business carefully and appropriately. 10 things to add into your financial plan. 1. A balance sheet. 2. A cash flow statement. 3. What are the tax impacts? 4. What about next year's forecast sales, budget, and cash flow? 5. An income statement. 6. Startup costs. 7. Operational costs. 8. Cash inflow. 9. Review your budget/forecast/projections versus actual reports. And 10. Take a look at your profit and loss by month. Step 8. Organization and management. By glancing at this part of a business plan, it should become clear what the organizational structure of the company is, and how the management staff and the board of directors can help the company achieve its goals. An organizational chart provides a clear illustration of the management hierarchy. Management profiles are usually included. 10 things to add into your organization and management section. 1. Cash book. 2. Receipt book. 3. Invoices received and sent. 4. Bank deposits and statements. 5. Petty cash expenditure. 6. Wage, work cover, superannuation, long service leave records, and employee details. 7. Capital assets register. 8. Materials purchased and allocated to each job or temporarily as floating stock. 9. Contact details of all inquiries, existing clients, suppliers, and subcontractors. And 10. Individual job records showing progress. If you have any questions on how to write a business plan, then write it in the comment box. Also, do not forget to like, share, and subscribe this channel to get future videos. Thanks for watching this video.